This is Market Snapshot with Dan French from Nova Home Loans with the latest information about home loans in Las Vegas. Now, here's Dan French.
Welcome to the Market Snapshot. This is Dan French from Nova Home Loans. I am your go-to loan expert here in Las Vegas. And I'm here today with my friend Chakits Krulsawat from Simply Vegas. What's going on today, Chuck?
Nothing much. I'm happy to be here. I'm actually very excited. Today's Mother's Day, isn't it?
Today's Mother's Day. Happy Mother's Day to everybody out there. Happy Mother's Day, Mom. Also, Doug, how you doing today?
I'm doing pretty good, Dan. How you doing?
I'm doing great. I'm looking outside and it's sunny, it's bright. I would be outside if it was me listening to the radio. What about you?
Did you call your mom today?
No, but I'm going to go right after, and we're going to have some dinner. So I got to make up for that.
Yeah, I got to call my mom right after the show.
So, guys, I just want to say thank you for tuning into our show. And as always, Chuck, it's a pleasure and a privilege to educate the Las Vegas community. Isn't that right, Chuck?
You're absolutely right. That's why we're here. You know, we do this 7 days a week, nonstop. We only take breaks.
So what's going on with events today, Chuck? I know we had some stuff going on this week. What's going on?
Yeah, I was actually looking. Here's the thing. Investors bought land at an auction on Tuesday, May 5th. The U.S. Bureau of Land Management auction. They auctioned over 600 acres of land. Only 357.6 acres was actually sold for $19.2 million. The average per acre was about $53,000. Now, throughout the whole Las Vegas Valley, per acre is about $189,000 per acre. This auction was actually held in the North Las Vegas City of Hall. Okay, the places that were actually sold was actually Blue Diamond, the Southwest Valley, also over there by the lakes. Okay, and the buyers were actually KB Homes, American West, and DR Hortons. Now, the overall builders sold. They actually sold 1,378 new homes in Nevada. 3 months end March 30th, up 8% since the beginning of last year, according to the New Homes Builder research. The median price of March close was $312,000. So the median at $312,000. Remember, new sales were at 212, 205 or something like that.
Yep.
So you could see the big difference as buying a new versus a used home. Now, that was actually up 9% from year to date.
Wow.
And actually, permits that were actually pulled were over 1,800 permits for the first quarter, up 34%. So a lot of stuff is going along.
Wow. Well, I'll tell you what, the Rock in Rio's going on. You heard about that?
Yeah, I heard about that.
They had Metallica. They had Linkin Park playing there last night, and I think there's a lot of audience. I was thinking is if you go down there, not only is it across the way if you got a room at the SLS, but let's say if you're driving down there and you just want to cruise the strip. I know a lot of people do that, and I think there's going to be a lot of traffic down there. I think there's going to be a lot
corner?
they're going to have somebody figure out the congestion part of that, because I'm sure they figured it out or trying to work on it, but that's going to be a problem, I think.
That's prime real estate now. Riviera Hotel, they actually started their liquidation on Monday. They're actually selling like flat screen TVs, pool table, not pool tables, but like gambling tables and stuff like that. So that actually is going to take place 9 a.m. to 7 p.m. Weekdays and Saturdays, and also from 10 p.m. to 5 p.m. Saturdays until everything is gone. There will be actually a $10 admission charge. Now, here's the thing. If you want to view the items that are sold, you can actually visit 781nova.com, and we'll have attached links so you can see exactly what's going to be held at the auction.
You going to go stand in line with me to get some of this stuff?
No, I'll just let you know what I'm going to get.
There's also some bull riding going on at the Mandalay Bay.
Bull riding?
Yeah, did you know about this? What is that?
Is this a PBR tour?
No, it's not the PBR. It's professional bull riding built Ford Tough at the Mandalay Bay. I didn't even know this was going on.
Me neither.
You know,
there's just so much going on through the valley. It's just crazy.
So you go down there, you might see some cowboys.
Yeah, you know, I want to actually try to ride one of those things.
Yeah. Also, we have a Fannie Mae has some recent student loan update, and I wanted to talk about that. So if you're out there and you have a student loan, what I want to tell you is whether it's deferred, in forbearance, or in repayment, a payment must be used to qualify you for a loan. Okay, so if it comes up on your credit report, I don't see a payment, well, we have to hit you for 1% of whatever that balance is. And before, in a lot of situations, if you didn't have it, then you could, try to get set up on some type of payment arrangement with your student loans. But I've had people that come in and they can't get qualified for this because let's say they have multiple student loans and they don't have payments on them. Well, they think, hey, I don't have any debt. I don't have to pay on these for 12 or 14 months. Now, if it's an FHA loan and it's deferred for 12 months, I'm going to say 12 plus 2 months because it's from your first payment, then you can get a loan for FHA, but conventional, it's different, And so the debt ratio on those, you have to apply a payment for those. And a lot of times I've had clients come in and I can't approve them for a loan because they might have 5, 6, 7, student loans on their credit report. And if you accumulate all that, that's raising their debt. And guess what? Sometimes that lowers them enough where they can't get approved for a loan.
Wow.
So
make sure you pay it.
Also wanted to tell you guys, it's time for the market rundown. Chuck, are you ready for the market rundown?
I'm always ready. Let's rock it.
Let's get this going. Okay, here's the market rundown. We got housing market statistics, interest rates trading. We have home prices in Las Vegas, rise slows. Las Vegas home land auction. Home is possible. Lender versus realtor market face-off is where we're going to end this up, Chuck. What do you think about all that? You think that's going to be great today or what?
That's a lot of content.
It's a lot of content. If you guys have any questions outside studio, 257-5396. Call us in studio, 257-5396. Or if you have questions outside studio, you can schedule a free consultation, a 30-minute consultation at 781-6682. That's 781-NOVA. And if you want to tweet me, you can tweet me at 781-NOVA, or you can go to our new website.
That's right.
Chuck, what's going on with this new website?
781nova.com. Here's the thing. If you guys want to watch our past episodes or, to contact Dan, or you have questions regarding loan programs, or want to start looking at homes, or want it's free CMA, please visit 781nova.com.
We're also going to provide a free appraisal and free home inspection on this show only. Only listeners on this show. If you call me and say, I'm listening to your show on Sundays, we're going to provide that to you. We also have a series of Take Notes. What is that, Chuck?
Take Notes is actually a library of educational videos for real estate professionals in the industry, and it was created for the buyer, investor, and also the seller. So visit 781nova.com. The navigation bar on your right-hand side, click Take Notes.
All right, we got a caller on line 1. I'm going to jump to this. Hi, this is Dan French with the Market Snapshot.
Yes, how you doing?
Good. How you doing today, sir?
Real good. I'm listening to your show, and by the way, I was down at that Rock in Rio thing last night.
Yeah, how was it, man?
Yeah, it was amazing.
Was it? A lot of congestion down there? Or?
The traffic, they got to figure out. I agree with you.
Yeah.
But the event, where can you see Lincoln Park and Metallica in the same night?
Yeah, that's exactly right. I was thinking about that last night. I had somebody that was actually a client of mine say, hey, I'm going down there. And I was working yesterday, and I'm like, man, I'm sitting there thinking, you go down there, and it's going to be a lot of congestion. So I don't think that they've got it figured out probably at this point, but they will at some point. I'm sure they're going to have cops or somebody down there that's directing traffic.
Yeah, yes.
What's going on? How can I help you?
Well, I was listening to your show. I'm in a contract right now on a home.
Okay.
And getting close, and they're not allowing me to close on the property because the flooring was not proper. Something's wrong with the flooring, and a water heater belt not strapped down the property. That I could take care of, I guess. But is this a normal process to hold the loan up?
Well, are you financing this?
Yes.
Yeah. So the thing with that is that the investor wants to make sure that the property is in good tact before they actually fund the loan, because again, it's something that it has to be move-in ready, if you want to say, where you have things that's in place that's necessary. It's a it's a necessary item, that has the ability to get that financing there. And so I just wanted to let you know that, yeah, we can do that. Chuck, have you dealt with this?
Yeah. Is this an FHA loan, or what type of loan is this?
FHA.
Yeah, typically FHA, I notice when the appraisals go out there, they're a little bit more tough. Now, it depends on the flooring. If it doesn't have carpet, that's something the agent should have notified right away in the beginning of the transaction and negotiate that into the transaction.
Yep.
Also, as far as like the water heater, typically, we advise our clients to let them know that, hey, because there's not straps here, we know that this is going to come up. Typically, we'll ask that for, up front. But here's the thing. The only way for an agent to know that is they would have to be seasoned. And also, it doesn't really cost that much money to get those items done anyway. And what I would do is just ask for the seller to pay for it.
Got it. Okay. No, I'll give it a shot.
All right, Doug. Hey, Doug, I just want to say, if you want to call us outside studio, 781-6682, and you can schedule a free consultation with us, and we can get you started on that and maybe, give you some more information that you might need.
You bet I might do that.
All right, Doug. Thank you, sir.
Thank you.
Bye-bye. Necessary.
Hey, you know what's so funny? I'm usually screwing up.
Well, here's the funny thing. I'm sitting out here, and they got these people moving.
Yeah.
And I'm, like, looking over at these people, like, what are they moving into this building? And I think I got a little tongue twisted because I wasn't paying attention to Doug like I should have.
Maybe we should shut that screen like I told you.
But anyway, so let's go on and move forward. So what's going on in the house? Oh, real quick, next caller will get a free lunch for two to P.F. Chang's. And I wanted to tell everybody that anybody that calls in, we're going to put Doug in a running for that. You can call Inside Studio 257-5396. What's going on with the housing market today, Chuck?
This is where we bring it play-by-play, week to week, okay, according to the multiple listing service. Now, we're going to be working on the sector for land, okay? Land right now, we have a total of 741 properties on the market for sale on the MLS, which is the multiple listing service. 99% are actually private sales, 0.5% are short sales, 0.5% is REOs. The total of sales of parcels were 119 since the beginning of the year. The average, according to the multiple listing service, is 218,000. The average days on the market is 168 days.
Wow.
Let me ask you this. You guys do financing on land?
Negative.
Negative.
We don't do financing on land.
Okay.
Nor we don't do any financing on business loans.
Got it,
So,
got it.
All residential.
The overall inventory, this is what I find very fascinating. We actually have 8,184 properties currently on the market. For single-family residents, the resale inventory had dropped 16% since February. Private sales is now at 86% of market share at a 1% gain since the beginning of the year. Short sales at 10%, which we dropped by 1% since last week. REOs actually dropped a half a point.
Yeah.
So private sales are coming up on the market. I want to talk about rentals really quickly. We currently have about 596 properties that actually got lease average throughout the whole year. I'm sorry. Last week, the lease, we had a total of 422 that was currently leased. Now, the funny thing about this is the properties that actually we sold last week was 472. So what this really tells you, and this is why it's very important that we actually look at the rental market too as well, is because what this will say is that we're stabilized. Okay.
Yeah.
Now, if we have more rental properties on the market, that tells you that buyers are no longer buying resale because it's just priced too high.
Mm-hmm.
Okay. So, I mean, we always want to make sure the rentals are just below the sales. Okay. So this tells you right here that we're stagnant throughout the whole Las Vegas Valley.
Yeah, it is. And we talked about this every week.
Mm-hmm.
We are stagnant.
Mm-hmm.
And so we really, I think, and we're going to talk about this a little bit more down the road on the show. But I wanted to talk about, rates and where they ended up. Okay.
Let's hear it.
Interest rates trending. So guess where they ended up this week, Chuck?
I would say they slide down a little bit.
Yeah, we lost a full point. I'm just playing.
Buy now.
We're actually flattened. We didn't do any difference in changing in pricing. So we're down about we're still down about 0.75 of a point since February. But let's go into it. Mortgage bonds finished the week near unchanged. This did hold mortgage interest rates steady. The strength of the U.S. dollar makes imports cheaper and exports more expensive. Okay, weekly jobless claims were 265 versus the expected 280. Again, so it's a little worse.
Mm-hmm.
But the mortgage interest rates finished the week flat from the previous week. There's no real changes, but I'm going to tell you, if you have not looked at the idea, again, of refinancing your home, if you have not looked at the idea of purchasing a home, if you're a renter out there, now is the time to do it. You have properties out on the market. You have rates that are still low. still low enough to make a significant impact on what your payment will be. And I highly recommend you calling us outside studio, maybe to get some options. 781-6682. That's 781-NOVA. You have any questions on rates, Chuck?
What is it right now?
Well, I don't want to go on to rates. We talked about this, Chuck.
Yeah, I know.
All right, but here's what we got to tell you. I'll tell you that rates right now are in the high 3s to low 4s. And I'll tell you, if you're buying an investment property, you're in the mid 4s to high 4s.
And here's the thing. At that rate, if you're currently renting, you definitely got to give us a call and run the numbers, because I can tell you maybe about 85% of the time, it's cheaper to actually get a loan and own a home versus renting a home.
Let's go into the Las Vegas has slowly increased in home prices. Did you hear about this?
Yeah, I was the one that gave you the notes.
Oh, yeah, you did, right. We had a nice discussion about that last night. So I think the problem here is, higher real estate prices may persuade more homeowners to put their homes up for sale, and there are more properties still overlisted on the market, just like we talked about, Chuck. Alternate solution to this is the supply and continued gains in the market do show stability within the Las Vegas community, but it still keeps home prices leveled.
Yep.
So what you really have to do here is you have to look at the needs to be continuous gains on the job force, as well as lending options need to keep improving for housing markets to keep thriving. These things are important, okay? Why do you think this is going on where prices are flattening and other cities are seeing big increases in home prices? Why do you think that's happening, Chuck?
Well, because of those, the hedge funds, when they were out here, they really inflated our market. And it seems like the sellers are still holding on to the past, and they think they can get top dollar. And again, that's why you'll see a bunch of, neighborhoods. You'll have about 15 properties currently on the market. And one of the challenges that I'm starting to see is the appraisal, and this is a big deal.
Yeah, it is a big deal. Home prices continue to rise and outpace both inflation and wage gains here in Las Vegas. Why do you think that's going on? You have any idea?
No, tell me.
So inflation, which is often an undesired economic phenomenon, can negatively affect the housing prices. Did you know that?
Now I do.
All right. So rates have increased a bit recently, but we've also had stagnation on not having enough buyers in the properties coming into the market. And I think that's a big problem with this.
Well, I don't want to say there's not enough buyers. I think what the issue is that, we do have a lot of buyers, but they're being very picky and choosy. They're getting what they want at this time.
So here in Las Vegas, the strength in our economy has made it easier for some people to afford homes, and you got higher prices, but some have had issues to even think about getting a loan because the wage gains have not accelerated with home value increases.
I thought they were going to increase the wages.
I thought they were too. And I think when you look at the housing market and the housing prices are going up and you have the inflation part of it, you have the job force not getting or gaining as much wage as they, the gains that they're looking for. Yeah. I think the housing market is actually surpassing everything.
So
and
they're getting pushed out, yeah.
It's making it harder. If you're somebody that's coming in, so really, if you're a Las Vegan that's out here working, you've been working, let's say you put some nickels together, you put it in a bank, and you're trying to save money or put yourself in a position to buy a house, by the time that you get there, well, yeah, there's houses on the market, but if you're not making the money that you want to make, and as far as where the prices have gone, because guess what? That's going to dictate what your mortgage payment will be if you need financing, then it's going to be a problem. And
it's important to take action now, because here's the thing. You're going to end up chasing the market, and you don't want to do that.
So here's what I noticed. When money comes in more expensive, borrowers, due to raising interest rates, which they've been doing, the housing prices may tend to, people might not tend to borrow as much money because they think, well, they're going to keep going up. And what happens if my wage doesn't get to the level where I want it to be? Let's say it's a very slow process, which it is in most situations.
Yeah.
Then you're going to say, you know what, I'm going to go get a loan, but I'm only going to get a loan that I can really feel comfortable with. I want a payment that's maybe, I don't know, $100,000 to $150,000, because at that point, because where rates might be increasing as well, you might only qualify for, you might qualify for $200,000. But what I'm saying is you might want to come in and only get that amount, because you might not want to go over that threshold of what you think in your mindset of what your monthly payment will be.
Yeah.
And if you're paying rent, let's say you're paying $1,100, and you're like, you know what, it's cheaper to buy a mortgage or have a mortgage than it is to rent, which it is in most cases. And you come in and you say, you know what, I still want to stay in that range, maybe a little bit, $100 or less.
Yeah.
Well, guess what? Your cap on that's about $150,000. Now, as rates go up, all right, and the prices go up, that means your loan amount's going to go up, and that means you're going to be qualifying for less. because not qualifying, but you're going to be wanting to get less because now your payment is going up and you want to stay in that threshold. And there's been a problem, not a problem, but it's been very difficult for us to find all of our borrowers in the $100,000 to $150,000 range.
You're absolutely right. We actually had a client that came into our office, I think on Friday or Thursday. I'm not too sure, but what she was looking for, she was actually qualified for 150. You sent her to the grant program. We got her done. I'm gonna get her closing costs paid for. Now the thing about it is where she was looking at 150,000, it just doesn't exist, and that's that case right there.
So I think it's necessary for us to have things in the market that like wage gains, for people to have their comfort zone to be intact, where if they're making more money, then they can qualify for more of a loan. And I think the inflation, and I do think the wage gaining here, the wage gainers have actually, softened, or they've stopped, or they've flattened. It's not going up. We've heard news about this thing going to change. I think the minimum wage is going to go up at some point, but I don't think it's gotten there yet. And I think in this market, it's keeping it stagnant because those buyers that are out there that may be buying homes that want to get into that $200,000 home, that's an average median price home. And by the way, as you told me, they might want to get into those homes, and they might want to have the ability to get the home that they desire. But now they're looking at homes where they can't desire, or the ones that they might not want.
And they got to get relocated.
Yeah, and they got to maybe do something to the home that they didn't want to, or they got to settle for a location that they really didn't want to. And I think that's important.
So if you're sitting on the sidelines right now, now's the time to give us a call and see what your options are. That's very important. You don't want to get bought out of the market.
I had people getting approved for a home loan sometimes, and what happens is when they get in with a lot less, and they say, well, what's my mortgage payment? Okay, do I have to have mortgage insurance? Things like that that's in part of the payment.
Yeah.
Now they're looking at it going, man, I thought it was going to be $1,000, but when you add all that stuff up, it's $1,200. And, they're thinking, man, for a $150,000 home, I'm paying, $1,100.
Yeah.
$1,000 or $1,100. That's still expensive. And you get to a $200,000 home, that's the average median price home where you say, okay, it's a nice 3 or 4 bedroom home and 3 bath. Well, guess what? Now your payment's at $1,250, $1,300 a month on current interest rates. And if they keep going up, you don't pull the trigger and you say, I'm going to go ahead and get this financing option started, you're not going to have the ability to get the same amount of home that you would get if rates still keep going up.
That makes sense.
So if you look at it, when we looked at the situation with, renters versus buyers, and if you talk about what renters are out there doing, I have a lot of renters that are still on the fence. And what happens is when you have somebody come in and they want education, we provide the education to them. But I think the biggest hurdle for them is that they think that, well, if they make that decision, then they're stuck in that position for a long period of time. It's a big commitment, those things. So I think if you're out there and you're a renter and you're saying, should I buy a house today? Should I go out and take advantage of where rates are at? I'd say absolutely. And we've told this before, it is somewhat of a perfect storm, even though the prices are still going up.
Yeah.
It's still a perfect storm. And if you're out there listening and you want to take advantage of this, I would highly recommend calling us outside studio.
I think what stops renters too as well is because they do have a lease in place. Now keep in mind, if you do have a lease in place, there's ways to get out of your lease. Okay. I mean, you can talk to your landlord just to let them know that, hey, in a couple months, I'm starting to look for a home. I'm going to get into something, and you're giving them some time. I mean, if he says no, there's other option as far as subleasing too as well.
And I'm going to tell you, we talked about this situation where you have home prices kind of flattened. There is multiple loan programs that my company offers. We have a diverse programs, very diverse, where we can get somebody into a home very quick.
Okay.
We have stuff that's out there that, I think some others don't, because Nova Home Loans can create its own product. We have a one day at a short sale foreclosure program. We have a foreign national program for Canadians. We have things like that. We have,
What about for Asians?
We have the Asian program.
Thank you. I appreciate that.
It comes with wonton soup.
Thank you.
So anyways, if you guys have any questions about that, I'd like to talk to you about it. 781-NOVA, that's 6682. And, we're also going to talk to you today about, let's go right into land being auctioned and what home builders are doing. We talked a little bit about this in the beginning of the show.
Yeah.
What's going on with that, Chuck?
I mean, right now, there's a lot of land that's just being sold and a lot of permits that are being pulled because of these developers. Money is so cheap right now. all they're doing is just buying land, building homes, and they're getting what they want for their property. I mean, at $312,000 for the median for a new home, that's just crazy.
I don't know why anybody would want to not look at the idea of looking at listed homes.
Well, I mean, here's the thing. A new home's not bad. Remember, we always talk about this. I mean, you got your pros and cons. I mean, if you're going to live there for the next 10 years and this is a home that you really love and you want something new, I mean, by all means, go for it.
Yeah, but you're obviously not. You're going to be losing a little money up front.
Yeah, I mean, you don't really lose money on the base price. It's the extra options. And also what people don't understand is when you do buy new homes too as well, is that once you come up with your 20% or whatever the down payment is based upon the base price, you still got to come out of pocket with all the additional stuff. So if you add upgrades $40,000, you're coming out of pocket. You're not financing that.
Yeah. So we're going to go ahead and cut the break. I want to go ahead and talk, you guys, when we get back, we're going to talk a little bit more about land is being auctioned off to home builders. This is Dan French with the Market Snapshot. Contact Dan French today at danfrenchnova.com, or you can call me directly at 702-216-3907. And to learn more about home financing, please make sure to tune into the Market Snapshot every Sunday from 12 to 1 p.m. to find out all the information that's going on in financing and real estate.
NMLS number 369115. Broker number 0902429.
Welcome back to the Market Snapshot. This is Dan French from Nova Home Loans. I'm here today with Chakits Krulsawat from Simply Vegas. Chuck, you been drinking, man?
Man, it's all that coffee, man. I was just like chewing
You
beer
can't drink on Mother's Day.
Yeah, no, I can't. You know what? I'm actually not even a coffee drinker.
Oh, really? Oh, it was coffee? I thought you meant like shots.
No.
You weren't doing shots. Shot. No?
No.
Oh, okay.
Shot.
So anyways, just got a text message from my mother saying necessity. And she told me to say that 3 times. So I'm going to say it. Necessity, necessity, necessity. Wanted to tell you guys, thank you for tuning into our show. We're going to go right back into looking at auctions. And Chuck, what else you got with me with auctions?
How to purchase a property at an auction. I'm sure you guys are interested about that.
What's going on with that? So the builders here have been purchasing lots.
That is correct.
They're doing it to buy future business or future
Yes.
to build future homes.
Well, keep in mind, the average is about 180 according to the multiple listing service. But here's the thing. You know, they bought this from the city for $50,000 per acre. That's a hell of a discount.
Yeah.
Okay? But I'm going to go into an auction, how an auction actually works. Well, here's the thing. When you're buying a property or a piece of land at the auction, you do have to pay cash. Now, when I say pay cash, you're not going there with physically cash. You're going to have to get a money order.
Okay.
Now, when we get the money order, you're going to have a couple for $50,000.
All right.
$5,000, okay, in increments, and also 1,000 increments, okay?
Mm-hmm.
And the reason why is because when we're down there, we're bidding, okay? You have to pay it right there and then.
Wow.
And what happens is they cut you a green slip.
Okay.
Once you receive that green slip, it takes about 2 weeks to record.
So if you look
with
at
the county.
if you look at an auction, okay,
Yeah.
and you're down there and you're saying, okay, is this something I can really get into? For an average person that's buying a home,
Yeah.
all right, let's say they go down to the courthouse, they're getting an auction, they put some bids in. I mean, can they really get those offers accepted, or do they deal with a lot of people that have tons of money?
You can, but it's
Okay.
very dangerous. And the reason why is because here's the thing. You may be buying a property on the first or second lien that you don't know about, and you're thinking that you're getting a great deal.
Right.
And let's say it's a second lien for $50,000, and you do your comps, and it's worth $150,000.
Right.
But there's a first attached to it, and that's another $100,000. Now you didn't buy it at a discounted price. That's why it's very important to get with a professional like myself.
You are a professional.
Thank you. I appreciate that. Toot my own horn. Now here's the thing. It's very important to pull a preliminary report when you're buying properties in an auction. And that's why I use 3 different title companies, because when you buy the property, you want to make sure that you're buying this thing free and clear.
Yeah.
But what I'm starting to see at the auction now is the spread in the margin is no longer there, because you have guys that have, $50 million and they're just buying bulks at a time.
Uh-huh.
So, I mean, it is pretty competitive, okay, in today's market.
Right.
So if you're looking for about, anywhere from 8 to 10% return, you could possibly get it down there. But remember, you will be competing.
So you have American West Homes, actually developer,
Yep.
buying a lot of this land. So let's talk about land auctions, okay?
Mm-hmm.
And we talked about this a little bit, but they bought a 25-acre parcel near the Henderson Executive Airport. That's over where where I live, yeah. And exactly, Inspirata. And it's zoned for 24 to 48 multifamily units per acre.
Ooh, that's a lot.
And so 2.5, and this is 2.5 million companies, including Nevada West Partners and home builder Lewis Operating Corp. Okay, we're amongst the bidders, but America West came out with the parcel for 4.16, basically it's 4.1 million.
Wow.
So I think that's great, and I think the thing with this is when you start to hear about this, they have to go to, when they auction off this stuff.
Yeah.
They have to show this to the public. Is that right?
That is correct. It has to be publicly announced. Now, as far as where do you find that?
Yeah.
You can find that, with the legal newspaper or the Review Journal or the Las Vegas Sun. So.
And when you look at this and you say, well, how does that help us? Do you think it helps growth within the Las Vegas community?
Oh yeah, definitely.
Yeah. And so when you have people that, and what that says as well is that they're looking to say there's more properties on the market.
Mm-hmm.
That means there is a demand for properties, especially new homes right now. I'm not going to always say new homes are the best idea to go after because we're not saying that. But it does show that, like you said, if you're that person that's out there and they're looking to buy a home and they're thinking, well, should I buy a new home or should I buy a listed home that's already listed on the market? Well, I think you got to look at it as a business standpoint.
You run the numbers. And the other thing is, here's the thing. We can go out and look at both. Okay, we can look at new homes versus a used home. Then you can kind of make your decision from there.
Right, and if you buy that new home, you're probably going to be paying more, but at the end of the day, you're going to be getting a property that you're happy with.
Correct.
A property that you can choose really what you want as far as the layout.
You're absolutely right about that.
Where if you go into a listed property, sometimes you don't have the ability to pick and choose. You have to get 7 out of 10 things on that property.
Yeah.
And then you're going to have to fix the other 3 to yourself. And I think that's the majority that's what happens with people out there going out and buying a home.
You're absolutely right. And I'm going to give you a quick tip right now. When you're buying a new home, if you have the money set aside for your upgrades, one of the first things I do advise you is do the flooring. Okay?
Yeah.
That's very important because once you lay that down, you don't have to move everything out later on to lay down the flooring. So spend your money wisely. Yeah,
so what they did here, American West Development founder Larry Canarelli, said he's eyeing parcels in the south and southwest areas that will complement existing homes.
Well, did you notice there's a lot of growth going out there too? And I think that's the reason why they're targeting that area.
Yeah, so they want to hold existing holdings for homes that will be future built. So I think that's big because
you're absolutely right. It's like buying oil. You're buying for later on.
So when you talk about auctions, let's wrap it up. When you talk about auctions, we talked about HOA foreclosures. You can really get a property down there as well, but that's also a very high risk. Nothing's really changed on HOA foreclosures, right?
You know what? You're absolutely right. I mean, we're just waiting right now for litigation to take place. With those HOA foreclosures, I think what's probably going to happen is down the future, all the HOA stuff is going to get impounded. And also what I think is going to happen is that they are trying to make the HOA liens no longer first position over everything else. And I think that's the way they're going to push it. And I think the problem is that if they don't do that, Freddie and Fannie, I don't think they're going to loan out here again, right? If they do something like that?
I think they're always going to find a way. I know they've been in a little bit of trouble as far as I've heard rumors about bankruptcy for them. So, I don't know the whole idea behind it. But if they pull out, it's going to pull out a huge market for us because they are really the ones that are giving us the guidelines and things to lend money off of because we ultimately sell it right back to them as a lender. So let's go right into the Nevada bond program. And I want to talk about this program because you know what? Everybody out there that's listening to this show, I want to let you know that you have the ability. We talked about if you're renting, this is the program for you if you don't have all of your costs in place, if you don't have all your ducks in a row. Okay. Why that's important is because this program is really the most lenient program that I've seen out there. Okay. It gives you 4% for your down payment. Your real estate agent has to negotiate closing costs if he really wants a true no-cost loan. Mm-hmm. But really, you got to look at the idea that you're still going to come out of pocket anywhere from $1,500 to $2,000 just for overages or anything that comes up. Remember, you have an outside appraisal that you have to pay for. But you know what? At the end of the day, if I can say I'm going to buy a home and I'm going to get a grant program to help me buy a home and I might just have my down payment or I might have a little bit of money saved, what I recommend is this. If you have money in your bank and let's say you have enough for down payment or maybe a little bit more, use that because I'm going to have the ability to really open up all my options for banking for you. You're going to have the ability to buy more of a home. You're going to have the ability to really look at all the options as far as what FHA is going to offer, because this is an FHA program. But you got to look at the idea that it's always better when you're in a position to make an offer and you have a down payment and you have maybe some closing costs that go into an offer versus going into the grant program.
You're absolutely right, because that gives you leverage. Because here's the thing. At the end of the day, the seller only cares about one thing, is what they are going to net at the bottom line.
So I also wanted to tell you that when you look at it, you're going to be paying a little bit more for this grant program. There's been a lot of news about it. There's been a lot of talk about it. I get a lot of people that call in about it. And what it is it's really a position. It puts you in a position where if you're a renter out there, there's really no excuses for you not to try to exercise the idea of getting into a home. This is really, really limited effort. You have to go with it's a 2-hour class online, which is really more lenient than any other down payment assistance program I have out there. And I'm going to tell you right now, you'll be paying a little bit more for a home, but I'm going to tell you what, you'll be a homeowner by the time you're done with me. And you know what? It'll be little to no money out of pocket for you. And I highly recommend you looking at this program if you're not in a position for down payment or a little bit more for closing costs, because I'm telling you, this is a great program. I'm going to tell you another thing. You're going to be paying a little bit more in the interest rate, just a little bit. But you know what? Again, you're getting yourself into a home, and it's really not requiring you to have little to no money out of pocket. You still need to jump on it. You got tax write-offs at the end of the year, and you have things that you can that come into play by being a homeowner that gives you incentives to do this. What have you dealt with? I mean, you have clients. We have clients together.
A lot, actually.
Yeah, I mean, we've had clients together that's dealt with this. A lot of them, they're using it, right?
Of course. And here's the thing. They're literally getting in a home to pennies on a dollar. I mean, one case, we tell you right now, went through that program. You pay for the appraisal.
Yeah.
I pay for the inspection. Closing costs, less than a couple $100, and got into a home. Unbelievable. Great testimonial video from this lady. So. And
the system that we have with it, it's very streamlined. It's not something you come in and you got to go through a bunch of problems and headaches and things that make you want to deter from using that program or going for that program.
Yeah.
And, you know, it's out there. There's a certain cap. Now, if you have there's a certain threshold of about how much money the household can make, okay? And if that household makes more than a certain amount, we can't give you that loan. Majority of the time, though, they do qualify. I mean, we're talking 96.5. That's the cap for this thing. If you make more in the household than that, then you don't qualify for this program. So, again, if you're somebody that's out there, and let's say you make a good living, let's say you're making a ton of money, and let's say you're trying to get a $300,000 or $400,000 loan, and your debt ratio, because you're making a good living, is low. You know, it's something you can't get because there's a cap for FHA at 287.5. But if you go anything below that, right, and you want to get financing for anything below that, up to 287.5, then we can get you a loan.
So basically, there's a lot of options out here with Dan, and you got to take advantage. You got to call in the studios today and see what your options are.
And I'm going to tell you right now, we have I have about 4 or 5 people that I'm working with on it. And, you know, the biggest concern that everybody has is when they get into this program is, well, how does it all work? How do I get started? Well, first off, it's always started with an application. You're always looked at.
And that could be filled up online.
Right. And then I give the 4% upfront to you. Okay. This is again, it's a grant to you, so you don't have to pay it back.
So you get up to 4%, or you're actually getting that 4%?
You get 4%.
Okay.
Yeah. And so you get that. We put it into your loan application. We run it through our banking system and through our bank. And, you know, again, the biggest important thing here about this program, okay, is that Chuck's got to come to the table and be that professional like he says he is. You're a professional, right, Chuck?
Always.
Okay. All right. Just want to make sure. And get those closing costs, because if you don't get those closing costs, then you're going to come a little bit more out of pocket. And our goal with that program, again, it's not for everybody, but with that program, our goal is to help you get a home for people that are struggling, or maybe are just taking a little bit more time than they need, that maybe don't have the luxury of having that money in a bank somewhere where they've saved it. Maybe they are in a position of saving, but they just haven't saved enough. And guess what? That program's available. We can get you in there tomorrow. And it's the same process as if I would do any other loan. It's an FHA loan. You got a cap of 287.5. It's a great program.
And a lot of people are afraid about how much money they got to put down. Now, keep in mind, what I'm going to do is every transaction that we write an offer on, based upon how we negotiate the deal, I can let you know exactly how much out of pocket that you may be coming out with, because each transaction is very unique on its own. And that's why, we really sit down with our clients, educate our clients, and figure out where they at financially, so that way I can help them negotiate a deal.
Right.
And it's case by case. I mean, we could be writing offers on 5 properties,
Mm-hmm.
but property 1, you may be coming out with $1,500. Property number 2, it could be $2,000,
Right.
or number 3 could be $800. And we calculate those numbers for you. It's not dead on, but you're a few couple $100, shot.
So I'm going to tell you, if you want to call us outside studio, 781-6682, and you can schedule a free consultation to find out and see if we can help you with the Nevada grant program. And I'm going to tell you right now, it's not for everybody. If you have a down payment and maybe a little bit money in the bank, I would always look at the idea of using that for your down payment, because you're going to have a better option of getting not only the home that you want, but getting the loan amount that you're looking for. If you go the grant program, I have to decrease the amount you're approved for, and also you're going to be paying a little bit more over the life of that loan for as long as you have it. And there is a restriction. I think you have to stay in it for 5 years, or else there's a restriction on it where you might have to pay some of that back. Yeah. So, I mean, there is requirements to this, but it's the most lenient program that's out there. I highly recommend using it. I highly recommend taking advantage of it. So let's go right into the lender versus realtor face-off. Are you ready for this, Chuck? I'm ready to battle with you today.
I'm always ready. Let me ask you this first question.
What's
right
up? What's going on?
Why does a lender request an addendum to be added to remove a buyer's middle initial sometimes on a sales contract?
Because when it's written on the through my application,
Yeah.
and then it goes to title,
Okay.
they want it to match exactly what the contract says to the application that I have for title purposes, so they can match it together.
So let me ask you this. What happens is when I write up a contract and it only has the first and last name, but later on, before we close, the buyer wants to add that middle initial, but on the application it has the first and last
You
name.
still got to get the addendum.
So we just create up the addendum, and
Yeah,
that's it.
because
Then?
they're not gonna fund the loan unless you get that changed, because it has to match whatever. And that's why when I send an approval letter, if the real estate agent does not put the name exactly on the contract, then that's when the addendum comes out, or else I would have to change it on my end. But guess what? It's a lot more work on my end, because now I got to redisclose that whole file.
And one of the things that when we sit down with our client, when I get the letter of approval, sometimes they'll have the first and the last name. The first thing I ask them, do you have a middle initial, and are you going to use your middle initial? So that way we don't run into these problems.
All right, got a question for you.
Yeah, go ahead.
You told me you had a client. This was last week. And first off, real quick, we're going to tell you why we do this, and I just want to jump into this. This is for people that has asked us questions last week, and I wanted to tell you that these are questions we're answering on the show. So if they hear it, maybe they're getting their answers again to be reassured. Plus, if you're out there and looking as far as buying a home or getting financing or questions on real estate, maybe these questions you're going to run into, these are stuff that maybe we can help you answer. So you told me you have a client that had another real estate agent last week, right, Chuck?
Yep.
And you earned their business, okay? When you have somebody in a position where maybe they're shopping you as a realtor, okay? What do you do if your client, which probably doesn't happen a lot, but your client, I'm sure it does, where they're talking to another real estate agent and they're saying, well, I want more information on this property. And they say, well, you're working with a realtor. And they're like, yeah, but I don't really mind talking to you about it. What do you do with that?
Well, that means I'm not doing my job and conveying everything over correctly. So here's the thing. When I sit down with the buyer and we go through the consultation, I explain to them everything that they need to know, okay? Also, I always tell them, hey, talk to other agents. All this is just an interview. You're interviewing me, and I am interviewing you.
Oh, okay.
Okay? And at the end of the day, they always seem to come back because the content that we provide and we update our clients of what's going on. I mean, we break it down.
I mean, we talked about this before. You always sign that buyer's broker agreement too, right? So typically you're not worried about somebody leaving your camp and going somebody else. And
no, because here's the thing. At the end of the day, once I explain to them what that agreement is, they're already comfortable. They like me. They understand that, hey, this guy knows what he's doing. He's bringing out a lot of content.
Yeah.
And at the end of the day, this agent doesn't control the deal. He just advises me on what I need to do. I run this deal. Okay, so that's very important.
What's your next question?
A married couple.
Yeah.
Okay. If somebody's getting if a married couple is actually getting an FHA loan, does the other one have to get qualified too as well?
No, but they do have to have their debt assessed within that loan. So if they stay off that loan, they have to pull their credit.
Okay.
Any debt that's on there, we have to hit them for it, and it's counted against their debt ratio and their overall debt, because you know what? State of Nevada's community property state. We're going to have to look at both sides of it and then add both, even though if there's one person on that loan.
What about if it was a conventional?
Conventional, no.
Okay.
Yeah. Go ahead.
No, I just asked you a question.
Oh, it's my turn.
Hey,
All
Doug.
right.
Doug. We already know who won.
Hey, Doug. No snickering over there, Doug. Why do seller agents not know if there is a second on a home that they're short selling? I've had this come up. This person.
That's crazy.
This is crazy. But this real estate agent, we're like 3/4 done with the loan, and then they find out that there's a second lien on a short sale that they're doing. Where does this go wrong?
I can't even believe you're asking me that, man. I don't even want to bad talk this listing agent. Here's the thing. When we take a listing, what we do is we pull a prelim report to the property because we want to see all the liens that are attached to it, okay?
Yeah.
And that's very important if there's the first or the second, okay? Because especially when you're doing a short sale, once you're tying up this property into a short sale, you want to make sure it goes through. Now, as a buyer's agent, what I do is I contact that agent. Number one, I ask them, how many short sales have you done throughout your career?
Gotcha.
Right? Also, who's the first and the second? Is it, B of A? Is it Aquin? And that tells me, like, hey, you know what? These companies are actually easy to deal with. Like, Aquin's a lot easier to deal with.
So this is something you should catch up front if you're a real estate agent.
Exactly. And this is where you really got to, probe.
Everybody makes mistakes, though.
That's true.
That's true. Let's give it out there to them. But let me say this. That's a big mistake. Mm-hmm. So if you're a realtor out there, that's a huge mistake that could not only do I have to get an extension
Well,
now,
that actually jeopardizes the firm too as well.
Exactly.
Because here's the thing. You're putting a deal together and you don't have all that information. And that could be a liability in the near future.
Gotcha.
So it's always very important to pull that prelim report to see things that are attached. Now, here's the thing. Things can come up later on down the line because nothing has been filed like a mechanics lien. But those issues are very minor and they could always be addressed at that time when you're doing a short sale. Now, let me ask you this. I mean, I'm going to go off topic here a little bit. As a lender, what do you find most rewarding about what you do? Seriously.
I think helping people, educating people. Like I said, when we start the show, it's a privilege and a pleasure to educate everyone that's out there because I think everybody's looking for answers. Everybody wants leadership, and I can provide the leadership. And I have open arms with that because when you have somebody you can go to that can give you the right answers, that's exactly what you're looking for out there. Isn't that right?
That's right. Hey, I won this one. I knocked it out of the park.
Doug's over there laughing like crazy over here. So
I was just watching Chuck dance.
Oh, yeah.
Dougie?
Doug's his head's bobbing, huh, Doug?
Oh, yeah.
Hey, did you know Doug was actually off cue with the market snapshots? He was like...
So let's talk about this. So let me say this. You have a jumbo loan, all right?
Yeah.
Is it harder to get a jumbo loan approved? And is there any restrictions? Because I have a person that's trying to get jumbo financing, and they're going through that process right now.
No. To answer that question is just no. It just really depends on the type of home that we're purchasing. And typically on those jumbo loans, I mean, those properties could run, anywhere up to $800,000 to $1 million. It really depends case by case, and it depends on the home. But I normally don't have a problem because we address all the issues up front there.
Hey, Doug.
Yes, sir.
How'd your wife like those that dinner ticket that I gave out last week?
Oh, I guess it was fine. She came home and she was quite full and said it was delicious.
Yeah.
She went by herself.
I had to stay home with the fish and the turtles.
Oh, that sucks.
Hey, you got to fry one of those turtles, man.
Don't you touch my turtles.
Look at the turtle.
So let's go ahead and let you guys know what's going on here. So who won that, Doug? Was that Chuck today?
You know what? It would have went to Chuck, but I'm an official Chuck, all right? You do not bust my chops.
Yeah.
So this is going over to Dan
Yes, that's what I like to hear. Hey, Doug, when he told me that you messed up, I already knew I won. I was already putting the V up. I already put the victory sign up.
It's gone.
It's done.
And in my defense, it was a slight miss up. The cue was a little off.
Hey, Doug, it doesn't matter, dude. We're family here, man.
Hey, we'll all talk about it at the dinner table tonight, all right?
All right.
All right. So it's a necessity to look at ideas of what you're looking for in a lender. And I'm going to tell you what I do as a lender and what my company does. And I'm going to tell you right now, this is what I do differently than most of my competitors, okay? We have everything under one tent. So what I have is I have in-house underwriting and funding. That's very important. If you're out there and you're saying, well, why is that important? Well, I control everything. If there's a problem with the file, I can go and talk to my underwriter. And if there's an issue where we need to fund the same day, I've had clients go and sign in the morning and they fund the same day.
And that's what we call streamlining.
That's right. And then we also have the ability, in most cases, to meet or beat the close of escrow. And I'm going to tell you why that's important. A lot of times there's a per diem on these contracts. You don't want to be charged excess money when you're already putting all the money that you got or a lot of money into just buying a home.
And that can run you up $150 a day.
I give status online progress updates, okay? And here's what happens. I literally have a checklist of emails that go out. So if you're working with me, you're going to get a checklist of when, let's say it goes into processing. Let's say it goes into underwriting. These things will be checked off as things occur and as the event occurs throughout your loan process, including everybody that's involved on your loan is going to get a Tuesday status call update from me.
That's a big deal because what happens is when a real estate transaction comes together, it's just not only the seller and the buyer. There's a lot of people involved in the transaction, and everybody has to be on the same page. That's great communication.
Yeah,
right
and
there.
appraisal management. We have an appraisal management company at Nova Home Loans, and that's great for efficiency. The average turn time is about 9 to 10 days. We can get it back in about 5 days. And I'm going to tell you, when you have control over how quick it's ordered and how quick it comes back, it's more efficiency for you as a client. I'm telling you right now, if you work with us, that's a huge thing to have as a company. Most companies do not have an AIMS department or an appraisal management company. The other thing is we have 12 bank options, which is really what I've seen is more than anybody. It's more bank options than anybody in the state of Nevada. All right, and I've seen this, and what that tells you is I can provide options. I'm still a direct lender. We're still a bank. But my underwriters oversee all of these programs for each bank, and then we ultimately give you the best pricing and the best rate. We are a 7-day-a-week service, and I'm going to tell you right now, I answer my phone on Sundays. Chuck's probably going to go show some property or something after this. I'm going to go check some emails and see if anybody needs anything from me. Obviously, it's Mother's Day, but you know what? We're still working, and we're self-employed. We have to work, right, Chuck?
You're absolutely right.
And here's the thing. Here's the things that we offer only free to this show, okay? We offer a free comparable market analysis. What is that, Chuck?
Comparable market analysis is a report to help buyers and sellers to identify a value with the property. Within that report, we'll show you everything that has sold, everything in contingent, pending status.
We also offer a free appraisal and free home inspection to anybody on this show. And I'm telling you right now, that's a huge incentive. I told you on our money savings of the week in the past, we saved about $740 a client that we closed a couple weeks ago. We also have a free credit services at Nova Home Loans. That's huge. If you have issues or maybe you're not even in a position, but you're right there on the fence, you might have the ability to get a loan if you can get some help or get some service or some type of assistance from somebody. Nova Home Loans has a free credit services. I highly recommend taking advantage of that.
And also, I noticed other companies don't have that, and if they do, they actually charge you through a third party.
And again, we told you Chuck gives out a first-time homebuyer's guide.
If you're a first-time home buyer, this will lay down the foundation step-by-step to home path of home ownership.
Also, we give free consultations outside studio, 702-257-5396. If you want to call in studio, and if our schedule a free consultation at 781-6682 at 781-NOVA.
And our website?
And our website is danfrenchnova.com. Also, it's 781nova.com. You guys make this show. We want to appreciate your guys' listenership, and also we're here to make you smarter home buyers and smarter home shoppers. This is Dan French from Nova Home Loans, and we'll talk to you next week.